Okay, hello everybody, and welcome to another episode of Nurturing Success. Today, I'm really excited to have with us Sheree Tromblee, who works in the insurance, what we call in loose terms property and casualty, but I think it's a lot more than that, as I think we'll discover today in our talk. But welcome, Sheree. How are you?
Thank you. I'm doing wonderful. I am busy as ever, as you guys would probably
Yep.
guess, but I'm doing
Yeah.
wonderful.
No.
Thanks for
It's
asking.
we've been going through a lot of interesting insurance situations over the last couple of months in our mortgage business, and it's happened to a lot of people. And
Yeah.
so we'll chat about those kind of things. So I think our time together is very, very timely. But before we go there, I always like to start and
Yes.
ask, what are you grateful for today? What's on your mind? What are you happy about?
Oh my gosh, there's so much. My husband, my
Love it.
children, I couldn't be more grateful. I feel like they are my heaven
Wow.
on earth. I struggled to have children, and the fact that I have a 5 and a 7-year-old little boy, it's like literally it's heavenly every day. I mean, mind you, they're boys and it's crazy, and but I am living my best
Love it.
life. I couldn't
Good,
complain.
good for you. Oh,
So yes.
that's great. And boys are
So
great. I mean, you probably remember that I have three boys, which are all adults now. So I mean, anyway, the same advice. I mean, enjoy every
yes,
moment. I mean, it's special, and it'll be crazy and nuts, and it'll be different 2 weeks from now, 2 years from now, but it's all good. So good for you.
yes.
Well,
No, I
thank you
love
for
it.
sharing that with us. And so, insurance is kind of in your blood. It's kind of family and so forth. But tell us how you arrived
Yes.
in this world.
So my brother married
Yeah.
Dana, who Dana is now the owner of Weaver and Associates. She's actually third generation. So her grandfather started it over 50
Yeah.
years ago, and then her father took it over, and then now she's the third family member to take it over. My background is I worked forever in West Hollywood as a business management firm where we manage, people in the entertainment industries, finances, and I loved it. I loved it. I loved it. But it was an hour commute
Yeah.
every day, and Dana would always say, "Someday you're going to have children, and you're going to want to be close to home and have a flexible schedule." So she finally talked me into it, and I made the plunge. Um, and as much as I loved my other career, insurance is something that is constantly
Mhm.
evolving, and there's something about it in terms of caring for people in a way where you're looking at the big picture, you're looking at their assets, you're looking at protecting them and educating them, and there's something very rewarding to that process. And there's so many different aspects to it, but every day when I talk to someone and I educate them and I do my best to inform them on the coverages and what they have and how they can improve, and it's incredibly rewarding, and I'm very blessed to have made the transfer. So
Love it.
that's a little
No, it's
background.
so. I mean, just even a few minutes in, and I think people are going to understand that the way that you and your firm approach this is very different than I think than maybe the way consumers even think about insurance. Right? They think of it as potentially this maybe not a necessary evil, but something that they may
Yeah.
may may or may not ever see the benefit from, and it costs money and it's changing and it's you got to make a decision, and yet you're here talking about educating and the big picture and assets and how it all works together.
Yes.
And I tend to tell folks, when you're thinking about insurance, it's really about protection first, right? And so protect the things you
Yes.
love and so forth. And then it
Yeah.
expands from there. There's a lot more to it than that. But I mean, that's a very, at least from my perspective, way of kind of thinking about it. So thank you. And thank you for mentioning Weaver. So Weaver is, as you mentioned, a third generation business in our
Yep.
local area, a fantastic reputation, great people, and we appreciate the partnership and the work we've all been able to do together. So that's great. So typically, we're talking to the audience of this, show is tends to be financial professionals and related professionals and so
Right.
forth. So, and again, I think even those folks, they're just people. They tend to think of insurance as just a
Yes.
thing on the side. How do we think about it?
Yep.
So, what do you tell financial professionals and those that relate? How do you have them kind of think about this work that you do?
Well, As a financial professional, your goal is to financially review your clients, look at their net worth, make sure that your I's are dotted and your T's. You basically want to make sure that everything is in line. And if you are missing a huge component to their largest assets, then you are going to be
Yeah.
basically in hot water. So, as a financial planner, those are our best referrals because we're dealing with people who want to improve. They're looking at the big picture. And as an insurance professional, when you send me over a client, my goal is to not necessarily write their
Yeah.
insurance. That's not, even though it seems like it would be my goal, that's not my goal. My goal is to review the existing insurance. My goal is to understand what type of assets this person has. Do they have vacant land? Do they have a
Mhm.
boat? Do they have young children? It's really understanding your life. And when you fully understand someone's life, then you can better protect them in all of the avenues. We are in a state where we have so many attorneys and um, so many different things can go wrong. And sadly, if you do not have adequate insurance and you're properly covered, those things, a slimy attorney could eventually sue you for something that you will have no
Yeah.
protection of. So looking at it from many different avenues and being able to dissect what you currently have and looking at and trying to dig deeper. Are you in the PTA? Are you a board member? There's so many different ways where you can basically kind of lose track of all of the stuff that you're involved in, but sadly those things can affect you in a
I
negative
know.
way depending on the circumstance.
No,
If that makes
yeah, that makes a
sense.
lot of sense. I mean, and so this is probably a good point for me to sort of have you drop in. So I mentioned kind of at the open that I use property and casualty as maybe a little bit of a catch-all phrase, right? Because it's hard for people
Yeah.
to understand the breadth of what you and other professionals in insurance can kind of offer. So give me just a sense for kind of the range of, I don't even want to use the product. I don't even like to use the word product, but the range of protections and coverages that you can kind of typically offer families and their advisors.
Well, so if someone comes to me, the first thing that I'm going to do is I'm going to ask for all their insurance policies and I'm going to look at, what type of assets. And then I'm going to look at, okay, well, did you co-sign on a
Yep.
vehicle? Because right there, you have this nephew who needed some financial help. So you totally forgot that you were actually co-signed on a car. Well, if that person, accidentally hits a pedestrian and that pedestrian is then paralyzed, the attorney is going to look up the owner of that
Mm.
vehicle. And there you've left yourself wide open to exposure. So it's my job to kind of uncover all of the different exposures there are. So a typical person would look at your home, your auto, and then your umbrella. And your umbrella goes over all of your stuff. But people kind of have this perception of, oh, I've got an umbrella, I'm covered. Well, no. You have an umbrella, but everything has to be accurately listed on
Good
that
point.
umbrella. And if you forget to list something like you co signed on a vehicle or you have this vacant land or you have a golf cart that you're driving around town picking your kids up from school and it's not insured, well, something goes wrong. If it's not insured and it's not correctly listed on your umbrella, you've just opened yourself up to a whole can of worms. Um, Sadly, there's no, insurance is very black and white. And if it's not listed and it's not covered, then you are opening
Mm.
yourself up. And, from a financial standpoint, living in California, our properties are worth so much and the first thing attorneys do is they check the
Yeah.
deed and they look at the property and they look at what it's worth. So if it's over $1 million, they're going to sue for over a million
Mm.
dollars. And that's just the sad reality of what we're kind of seeing these
Yeah.
days.
Well, funny enough, I mean, yeah. So we're really talking about liability. So you're trying to identify where families have potential liability, and there's lots of hidden
Yeah.
areas, as you've already pointed out, that people don't even think they have liability, and they do, like co-signing for a nephew, and we sit up all the time
Yes.
where people have done little things like that, and it affects them on the mortgage side too, right? They forget that they did these things like that, but
Right.
that's a different conversation. And then one thing you mentioned, which I have a golf cart. I'm I'm
Yeah.
100% sure it's not listed on our umbrella coverage and so forth.
Well,
So there you go. So thank you that I wrote that down on my little list here.
well, and the thing is, then you go down this rabbit hole of, do you let your grandkids
Yeah,
drive
that's right.
the
Yeah,
golf cart? And if your grandkids hit another kid, there's the
that's
potential
no, that's
liability,
great.
and we hate to think about these scenarios, but at the end of the day, like,
Yeah,
I have an e-bike, and my e-bike is
good
insured.
for you. Wow.
And am I necessarily concerned? Yeah, I'm a little concerned about theft, but what if I'm driving it down the street and I'm going 20 to 30 miles an hour and I accidentally hit
Yeah.
somebody? Well, that would be an exposure.
That's yeah. I've clearly not thought about it either, because with the proliferation of sort of these toys, in the last couple of years,
Exactly.
people I'm sure don't even
Exactly.
think about that. But it's all risk, it's all
No.
liability. That's well, thank you. That's great.
Yes.
So, what are some of the challenge, right? So we know in our area here, we've had these disasters, these horrible fires, and just the loss of homes, and it's just awful to think about. But that being said, there's risk, and it hasn't gone away, right? So, what are some of the things that consumers are sort of? What are the challenges, and that's created, you know. Uh, insurance companies aren't doing the same kind of coverages. They're trying to find a way to limit their exposure and so forth. So, what is some of the challenges that you're discovering that homeowners and other consumers are having now getting the coverage they want? And anyway, just share with me what's kind of happening in that world.
Yes. So it's very, very simple. The insurance companies that you want to be insured with, Mercury, Safeco, Travelers, Nationwide, all of the companies that you want
Mm-hmm.
coverage with, have also paid out
Yeah.
significant amounts of money for these fires. And so what they're doing is they're cracking down on the risks that they will insure, and they're cracking down on the current clients that they have. So what that means is this: they want clean risk. And when I say a clean risk, that means your house has roof, electrical, plumbing, and heating, and everything's been updated in the last 15
Yeah.
years. Okay. So if your home is not a clean risk, if you do not have proof of roof, electrical, plumbing, and heating in the last 15 years, and proof, I mean by a general contractor, a legit, where there's actual documentation, then my first recommendation is, do not shop your insurance. Don't shop it. If you come
Mm-hmm.
to me and you're with State Farm and you say, Sheree, my insurance is tripled, it's quadrupled, and you're with State Farm, I'm going to say, is your home updated? Have you updated it in the last 15 years? And if you say no, I don't have proof, I'm going to tell you to raise your deductibles and stay where you're at. And the reason I'm telling people this, as much as I want to write your insurance all day long, I'm not if I can get you into the system, it's all AI. But after I write the business and you cancel your current
Mm-hmm.
policy, an actual person from the care, every single insurance company inspects a property after issuance. They go out, and if they see something they don't like, if they see trees that are touching the roof, if they see your cement, a new one that I've been getting a lot of memos on from carriers is that your driveway has it's not
Yeah.
even.
Oh.
So there's cracks in the driveway. If your roof looks old, so then what happens is, after you cancel your State Farm and I issue your new policy with Mercury, Mercury goes out 30 to 45 days after and they inspect and they say, we don't like the roof. It's too old. We're getting off. Put a new roof on. I go back to you and I say, okay, John, we need to, this is what they're coming back with. And you're going to say, wait a minute, I have to get a new roof. Do I have proof of this? No, I don't have any proof. So now you're in $30,000 deep,
Yeah.
when in all reality, I don't want to put consumers in that position. So my place is, if you don't have adequate updates on your property, do not shop around. Stay where you're at, even if it's going up in premium. Because you're likely, because then if I have to rewrite you from Mercury to another company, your coverage is going to be so expensive and the coverage is not going to be there. So your alternatives are not good when you could have just stayed where you are. So that's number one. Updates. Incredibly critical. The other thing that the insurance companies are cracking down are location, as we know. I mean, you can't, the location, I just got 2 referrals from your office this morning and they're great, but they're in Arcadia. And Arcadia right now is very challenging. So, when we're looking at a new property risk, we're looking at the updates, we're looking at the location, then we're looking at just the general condition. If you have a huge oak tree, you're buying a huge oak tree house with an oak tree in the front and it's touching the roof,
trouble.
It's going to be impossible. I know.
And it's just nuts. And this is so timely right now because all this, at least from my perspective, feels like it's changing like literally day by day.
Yes.
And we're running into these challenges, and this has come up just in our business, in the last couple of months, and sort of the roofing issue. And you and I have had an email conversation about this, which we can talk a little bit more. Is that for existing policies, we're finding that they're changing the coverage for the roof. Instead of it used to be what they call replacement value, full replacement value.
Yeah.
Now they're putting sort of an age rating on it, right? So whatever the condition as is condition is now the coverage. So maybe if a brand new roof is $30,000 or $50,000, but it's 25 years old and now that value is maybe $2,000, just for argument's sake.
Yes.
The coverage is only $2,000 because they've changed that policy. And what I think a lot of people don't know is that lenders are not going to accept that anymore. They want full coverage, right? And it's just literally transitioning right now. Fannie Mae and Freddie Mac, who are the biggest purchasers and insurers of mortgages across the United States, have said, we don't want this age-based, we want full replacement, right? Yeah. And so, and many people don't know the policies have changed, again, because it reduces the premium. Yes. And so forth. So, I mean, any comments on that? And again, your advice is great because you're right. If you don't need to change, even though the premium may have gone up, you don't shop it because nothing's going to happen. But for people who are buying homes, right, it creates a challenge. So anyway, anything you want to expand on that? What people can do?
So the situation is you have an older roof, and we see it as an insurance company. We're like, okay, great. I can write your insurance policy, and the carrier, since you can't afford to put a new roof on, the carrier is going to give you actual cash value at the time of loss and not have coverage for fire. So that means, okay, great. This person's trying to close escrow. They can actually get an insurance policy without having to do the roof. To us, it was a win because we're saying, okay, the client knows that they don't have coverage. The policy is reduced in premium, so they're able to pay it. So we have an option. So we're very excited about this. But then looking at from your standpoint, it's not going to be doable. The alternatives are pretty simple. You have
replace the roof or
replace the roof. I mean, the thing about it is this. We have so many different insurance companies that come in and out of the market. Okay, so we have carriers. We have our standard carriers. And what a standard carrier means is that it's backed by the state of California. Now, that means, though, that because it's backed by the state, that they also do have stock in the FAIR plan. So that means that all these companies like Safeco and Travelers and Nationwide, they're all having to pay a lot of fees for the fires, but so their rates are going up. But then we have these other insurance companies that are coming in and out, and they're not backed by the state. And what that means is when they're not backed by the state, that means that they're financially rated. Okay, so they basically get a grade based on their financial assets and their book of business. And there's so many different things that go into this. But you have companies that come in and out of the market, and they're willing to write these properties that may be in brush zones, and they're not going to decrease. So you might be able to find a company, one of these, companies that's that's willing to write the roof as is. But then the other hurdle is, are they financially solid? Are they going to be in the market for a couple years and then back out? Are they going to write me at 2,000 a year and then next year I get a premium of 5? And see, those are the things that you can't control when it's not a non-standard company, because they can kind of in a way make their own rules, because they're not backed by the state and they don't have those regulations in place. So it's just one of those things.
No, it's I was gonna say fascinating. It's a little horrifying, but but it is what it is, and that's why ultimately I'm going to say you need professionals like you to sort of navigate these waters, because it's not as simple as it might have been 10, 20, 30 years ago when you was a few nationwide companies. You went and you picked one, and that was your neighborhood agent, and that was fine, right? Because you met him at church, which is great. But now you might need a much wider look into the marketplace for insurance and so forth. So here's another one that I'm going to throw at you that came up actually this morning. And so this client's purchasing a property in a condominium project. I can't remember the number of units, but it's a large enough project. Maybe it's 40 or 60 unit type thing. And it is located in what I think would be considered a high risk area out in Ojai. In any case, so it's interesting because they have coverage for the project for in the neighborhood of $21 million, but then the wildfire coverage is only $2 million, right? And so they have this difference between, so the coverage for the entire project, again, $21 million, and then specifically a line item that says wildfire coverage, only $2 million. And we literally had the loan decline this morning because of that policy.
Right.
So I've never run into that before. I don't really even know what it means. And so we're sort of working on it now. But anyway, any insight into what that might mean for potential buyers in those kind of weird areas?
So when I look at a situation like that, so if you're going to have a construction project of, like you said, 22 million is the building coverage. So 22 million, and then you have 2 million that's going to cover fire. That means, so that this is what it's going to play out. So there's a huge fire, okay? And the whole entire structure is burned to the ground, okay? So what will happen is the insurance company is going to give them a check for 2 million, and then they're going to assess all of the people in the structure the amount that it would cost to rebuild. Now, as a lender, I wouldn't feel comfortable with that. So what are you going to do? When it comes to condos are getting incredibly tricky. We do have options in terms of covering structures, and it could work out depending on the carrier, but we would almost have to insure the unit as a home.
Interesting.
Instead of it. So when we insure a condo, we only insure the in walls. Okay. The condo association covers the structure itself. So we may have to start looking at insuring condos almost as if it's a home, but that's going to become very tricky because it's a shared risk among multiple people. So if I'm insuring this condo unit for 400,000, but the guy next door is 100,000, and it just becomes very, very complicated. But from your standpoint, as a lender, I wouldn't want.
Yeah, we don't know how it's going to go. I mean, there are in our world, like your world, there are lenders that work on, we'll call it the fringes, right? So they're the non-admitted carriers in your world, or those sorts of people. In our world, they're what we'll call a non-qualified mortgage, right? They're not selling to Fannie and Freddie. They're sort of out there, and their rates are going to be a little bit higher, and they're willing to take more risk. And you don't maybe face the same financial fear that they might be out of business in a couple of years or change, because they can't change the rates next year. And then it doesn't really matter if they're not around, because that mortgage will be sold, but you're definitely paying more for it, assuming it could even get done. Right. And so we don't know because it's early in, and I think this is going to be very fluid throughout the rest of 2025 and 26 and so forth. So again, I take it back to the important collaboration between professionals to find our clients, our mutual clients, right, options and choices, and educate, right? Because we don't know,
Right.
and consumers don't know. They're not going to know. And most financial professionals who might be
Yeah.
listening to this also don't realize this is all happening right now. So we have
Yes.
some work to do in front of us.
No. I know. That sounds like a very tricky
It's going to
situation.
be interesting. You mentioned the condos. I mean, we know that condo projects, older projects, tend to be severely underfunded, both from a reserve perspective and also from an insurance
Yes.
perspective, right? So you have two things happening at once, where these projects are aging. They don't have the reserves to be able to do infrastructure rebuilding and those kinds
Right.
of things, which then is going to cause the insurance to also go up. Insurance companies don't want to insure these older. So anyway, it's just an ongoing
No.
mess, right? Um,
No, and the thing that you have to understand about a condo unit is if it was built in the 60s or 70s, maintenance is not covered by
yep.
insurance. So that's the number one what consumers need to understand. It's sudden and accidental loss, and the number one cause of, condo losses is water, because they've got these pipes that are so old in these buildings and they're constantly leaking. And the insurance companies are just over
Yeah.
it. They're not wanting to take on this risk of these constant leaks. But how can you go in and repipe a
Yeah.
huge condo unit? I mean, that's tons of
Yeah.
money. So then it's very
Sure.
challenging to ensure the actual building for these condos, which I don't do. I do the actual structures for the person that's
Yeah. Of course.
purchasing
Yeah.
it. But that is a
It's a
whole
whole
other
different
topic.
world. So,
Yes. Yes.
so let's try and go on to some a little more positive and exciting now. We've got
Yes.
so.
I know. I feel like
And your passion, love.
downer.
You mentioned your passion and love for the business, which I think is fantastic.
Yes.
Just tell me a little bit about your team and the process, because I know it's a family and you guys all love each other, and so forth. Just tell me a little bit
Yes.
about how that part of it in the business works, because I know you're excited about it and happy about it.
No, so we pride ourselves on, risk management and making sure that we are honest with our consumers and clients. So we have, in terms of our personal lines, we've hired two new people. So we have a total of four account managers. So that means I'm typically writing the new business. So I'm bringing in the new business all day, and then we have four account managers that specialize in our clients' day-to-day
Yeah.
needs. Okay, you refinance and
Yeah.
you
You
need
need
a
deck
you need
page,
to
whatever.
change
Yeah.
your lender.
Update that.
Yeah. Or your young new drivers got their driver's license. Typically speaking, you would have to call an 800 number and deal with all of that. But no, brokers are different. What's great about us is you call Teresa, or you
Yep.
email Teresa the change, or you call her and it's done. Um, we are constantly priding ourselves on making things more efficient. And we all know with AI, and having all of these new resources, it's only getting better
Yeah.
and better. So as far as our annual reviews, we're trying to touch our clients annually. Has anything changed? Did you add a trust to your property? Do you have, did you build a ADU? There's a lot of things that occur in your
Sure.
life. And the first thing that you're going to do is not call your insurance agent and tell them, hey, we've done X, X, and X. So we are trying our best to be proactive. We use that word a lot. Proactive is key, because if we can have open communication with our clients and reaching out to them and trying to find discounts. We know that insurance is expensive. We know it's the last thing you want to pay for. My brother-in-law just texted me right now because he needs a new home
Yep. Yep.
policy because his went up. And we know that it's a lot. And we're trying to do everything in our power to make this process as easy as possible in terms of what you need to take care of, discounts, educating you. It's our goal to make it as easy, as seamless as possible. So that's where we're at right
I
now.
love it. And, from a personal perspective and having worked together for many years in our firms together, I can say that everything that Sheree is saying is true, right? So, I mean, you look at a planning process like annual reviews and digging into these different coverages and all the liability exposure that people have, it's real, right? So this is really, they've
Yeah.
built this business in a way that helps support financial professionals and their clients and consumers. And, anyway, I for one appreciate it, and as you know, we
Yeah.
recommend it all the time. So we'll close in a
Oh,
couple
thank
of
you.
moments here. But so do you feel so? You're talking to someone
Yeah.
younger, right? A next gen type person, we'll call them. They're looking
Yes.
for a career. I mean, do you are
Yes.
you excited enough to tell young people to get in the insurance business? How do you feel about it?
Yes. Well, it's funny you ask because the two new employees that we hired are, was it Gen?
Yeah, I'm not sure.
They're
I
in the
can't keep
newer
track of what they are
generation.
anymore. But yes,
No, I can't
Gen
either.
Y or something.
I'm embarrassed. Yeah. Yes. But what I love about insurance is that it's constantly
Yeah,
evolving. So for me, I love to talk to people. I love having the connections. I love meeting people. And I love just that there's constantly something happening and something going on. To me, that's what keeps it
yeah,
going. It's not stale. It's like even with the fires that happened, it's devastating on so many levels, but it was also we
yeah.
learned
Right.
so
You're
much
so
about
right.
it.
Yeah.
We learned how our carriers
Yep.
will respond to fires. We learned that coverage is so incredibly important. So as we go through life and these processes, insurance is such a huge part of how you will really become an adult.
Yep.
When as
It's
you get
adulting.
older, you start buying all these insurance policies and protecting yourself because it's so
Yeah.
important. So I feel like having this constant evolving field and all of the things that go with it, to me, make it very
I,
interesting.
I love that. Yeah. I mean, we're in. In our business, the mortgage business and financial services in general, it's been dominated. It tends to be dominated. I hate to say it, but sort of a little bit older folks, and they've been around for a while, and they
Yeah.
tend to look a lot like me, and that's fine. But we need new blood. We need another generation to come into it to bring new ideas, AI, new thoughts, more creativity, and
Yes.
so forth. So I'm glad you're excited. I'm excited about the more and more people coming into business. I encourage younger professionals to consider all of our businesses, right, whatever they are.
Yeah.
So I appreciate you sharing that. So I'm gonna let you have the last word, right? So I want you to kind of maybe share
Hmm.
something with the world that is something on your mind that you think will make a little better place. So you have the final thing to say that'll make a world a better place, and we'll leave it with that. So thank you, Sheree, for being with us today.
That's a tough one. I feel like we're here for such a short time on this earth, so we have to make every moment, every opportunity. So for me, making sure that I'm doing the best to make the right decisions in my
Yeah.
life, and I try to think things through. Insurance is part of that, and protecting our families and my children, every generation, all of this that we work so hard for, trickles down to our kids and their kids. So I feel like for me, living this life and doing the best I can, and educating people and making sure that we're all cared for is to me the most important thing, because it's all about love and caring for each other and nurturing one another. And to me, that's really what it's all about. So
Awesome. Thank you very much. I
thank
appreciate you being here, and
you so
we'll
much.
talk soon. All right. Thanks again, Sheree.
All right, thank you so
All right.
much. I really
All right.
appreciate
My
it.
pleasure.
All right, take care.